Welcome back, everybody. Today I'm going to start a new series about value investing where I evaluate one value stock every day. And the stock I want to talk to you about today is Smith and Wesson Brands. Yes, Smith and Wesson Brands. They make the guns. So, a little bit about Smith and Wesson Brands. If we bring them up on bar chart over here, they're under SWBI ticker symbol, Smith & Wesson Brands. They are a $1.386 billion company, and they have a PE ratio of 6.38. Yes, a very, very low PE ratio. An impressive earnings per share of 4.72. Their next earning day, I believe, is in August. They just finished their financial quarter. They're on a little different schedule, but they're starting their 2022 financial year, and I guess the first earnings will be in August. They have annual sales of $1,059,000,000, annual income of $252 million. The price to sales ratio is really impressive, 1.36. Price to cash flow, 5.67. Price to book, 6.19. So let's go over and look at their income statement. As you can see, their income has drastically improved this past year. Last year they lost $61 million. This year they're reporting an income increase of $252 million. So during the pandemic, they weren't really selling any guns. Nobody was buying guns. So what happened? Well, President Biden was elected, and people are afraid. People are afraid their freedoms are going to get taken away. And as more people are going out and doing recreation activities, we could see that the sales have doubled from $529 million to $1.059 billion. So we've got the sales growth the last 3 years. From 19 to 20, you got sales growth, and doubling from 20 to 21. The real question is, will this continue into year 2022, their financial year 2022, which starts, as you can see, on April. You see their EBITDA has grown the last 3 years. So it looks like they're on a positive trail, on a positive. Let's look at quarterly. You can see quarterly they have improved every quarter for the last 4 quarters, going from 48 million to 52 million to 62 million to 89 million last reported quarter. Look at their EBITDA growth. From 78, they dropped to 68 million, 87 million, and 116 million. So we can see that they do have sales growth year over year. And we're going to dig in and see if they're going to continue that sales growth. Let's look at any news and headlines. They're saying that this is a value stock. Zacks has rated this as a value stock. There's nothing significant here, but let's look at the cash flow statement. And then the cash flow statement, we want to look at the free cash flow. So we take the operating cash flow and we subtract out the capital expenditures, and we get the free cash flow. As we can see, this is the year over year. From 18 to 19, their cash flow has decreased, but the last 3 years we have increasing cash flow. As we can see, their cash flow has increased almost threefold right here. So they have 3 times more cash coming in this past year, this big gun sales year. So as we could calculate the free cash flow to the market cap. So the market cap is, it's 293,282. So we'll go over here and we'll just type this out on Google, and you can do this on other stocks as well. 293,282, 293,282 is their free cash flow, and their market cap is 1.32 billion. So $132 billion divided by the free cash flow. Added a couple extra zeros there. It should be 13.2. So the free cash flow is 13.2. Their market cap, actually less than that. Made an error somewhere here, but as you can see, you get their free cash flow being, less than. Let's do this again. Oh, this because this is in millions. So 293 million, and their market cap is 1.32 billion. So it's actually 1.32 divided by, let's see, 0.293. Let's do 0.293, and then we get the number we were looking for, 4.50. Okay, so that means that they're bringing in enough cash this past year that in 4.5 years they could buy the company over with just the cash in their account. Think about that. A good company might have, 15 to 20 times free cash flow to the market cap. So we can see that they are making cash hand over fist. And you can see that their quarter ended. This is their estimated. And then you can see their actual earnings per share shown on Robinhood. And their next quarter ends and will be reported around September 2nd. So that's their first quarter for 2022. Like I said, they're on a different accounting schedule than most of these other stocks. There is a small dividend yield, but with their free cash flow, they are not going to have trouble paying it back. So let's go ahead and look at the balance sheet. Their current assets right now are $268 million, and their current liabilities are $125 million. So they have more than twice the assets to pay down their liabilities. So that's a pretty good ratio right there. And as you can see, the shares outstanding have been decreasing. So they've obviously been using all that free cash flow to buy back their shares, meaning as more shares get bought back by the company, there's less outstanding shares. So there is a bigger pool of money per share, or their EPS per share will go up. So we can see that this is a very bullish outlook on the company. And what I like to do, I also like to go to FinViz as well, because you can see their PE ratio is 6.18, but they don't expect to do that well this upcoming year. That's why we look at the forward PE as well. So they're not going to sell, $1.2 billion worth of guns this upcoming year, but they estimate to sell maybe a third of that based on this forward PE. Price to earnings growth is under 1. We like to see that. Price to sales 1.42. These numbers are a little bit different. There it is on FinViz. I only have to calculate that. Price to free cash flow 5.24. It's a little different than what we calculated based on the financial statement. See, earnings per growth next year 1.79. Nothing to write about. Earnings per share trailing months. We also look at the net profit margin. So the profit margin 23.80%, which is over the 10 to 15% range we like to see on stocks. We don't like to see, slight profits. So they're making a lot every time they go and sell these guns. And let's see if there's any news here. They're saying that it's been a high year. So I looked at these on Google, and they said Smith Wesson doubled more than $1 billion in the year to May. Smith Wesson's reported sales doubled in the last fiscal year. Americans stockpile guns and ammunition among the coronavirus, propelling to $252 million profits, giving it cash to pay all its debts. So this past year was so great that they've paid all their debts. They have free cash flow to buy back their shares. So this is almost guaranteeing that this will go up. It's made a run already. Whether there's more room for it to run, there probably is. It just depends on, if people keep buying guns at this rate. And I was looking back at the demand for guns. See here if they're going to see anything. Just look up demand for guns in general. Unprecedented demand for guns and ammunition has outstripped supplies, leading to bare shelves and ammo aisles in gun stores across the country. Ammo prices are at the highest ever seen and still nearly impossible to keep in stock. This was from June 2nd, 2021. So, looking at this, any gun stock probably will be doing really well. Any sports store that sells ammunition and guns, any ammo stock, but Smith & Wesson seem to have the most attractive PE ratios right now. So this is one I'm definitely keeping on my watch list. I'm going to start a portfolio over here on bar chart for these value stocks. I'm going to go ahead and make this new portfolio, and each time I do one of these videos, I'm going to go ahead and add it in there. This will be I'll call this value stocks portfolio. I'm going to come up with a stricter criteria and do some cash flow as well for some of these, we could say, growth stocks. So there's my value stock portfolio. The SWBI, we'll keep a track on it. And if you SWBI, okay, and if you add me and subscribe to me, you can come back and see how these stocks did. You can see if I could put together, a criteria that everybody can use, put out these lists to try to beat the stock market right now, because it is extremely overvalued. So you want to be careful moving forward to try to get out of some of these hype stocks before they crash. I'm kind of worried to put my money in something who has multiple earnings of 80 plus. Even though it's a good company, something like, I don't know, maybe Airbnb that's not making any money, maybe Uber that's not making any money, Skills, Tesla that's 800 times earnings or whatever it is now. I'm going to try to stay away from that because everybody says the stock market crash is coming. I just don't want to get crushed. So I'm trying to get something to where the book value will hold the share price. So the profit earnings are low, the book value is low, there's demand for the product. So what is it trading at right now? $27.50. Let's do this. Let's have $100 worth. $27.50. That'd be 3.63. Let's say for this portfolio, let's say $1,000. We'll put $1,000 in each stock. That'll give us 36.36 shares. We'll just say 37 shares. We'll buy 37 for the portfolio. And then we'll add note. A value stock. We'll call this value stock series. And then we'll put the date 7/9/21. And then we can come back in 3 months and see how this is done. And Bar Chart will track this for us as we go. So there we have it. Our portfolio, Smith & Wesson, total market value a little over, the $1,000, 1,016. There was the date, the time, and we're going to track these value plays. One last thing before I go on this video, whenever you're doing stocks like this, it's a good idea to kind of check these other stocks as well, like a competitor. So we'll go ahead and check Ruger Firearms just to give a comparison. Their price to earnings ratio is higher, 12.88, 1.43 billion market cap, so roughly a similar market cap, 3.11 dividend yield, and as you can see, they're also beating their earnings per share as well. So let me go ahead and look at RGR on here. So price to sales, also very attractive, 2.56. Price to cash flow, 12.28. Price to book, earnings per share of 6.38. Price to earnings, Their market cap, like we said earlier, it's going to vary between some of these programs. 1.43. Let's just go to quick income and see if they doubled. Look at this. Their sales did not double last year, but their net income tripled. So I don't know what was going on there that would make their net income triple. Operating income is triple here. So whatever their operating income, their gross profit was nearly double here. So for some reason their cost of goods sold was different there. So their net income was significantly higher, but as you saw with Smith Wesson, their net income kind of grew over the last 3 years, and their EBITDA is also growing as well. But let's see if they got the cash flow that Smith & Wesson had. See, your cash flow has also jumped, but that's because of the pandemic and stuff. It was similar over here before. It's been all over the place. It doesn't show that aggressive jump as Smith & Wesson. Let's also see their assets, 234. Their liabilities, current liabilities, 81. So they've definitely got almost 3 times the assets liabilities, and they haven't bought back any shares yet, as you can see. So that's kind of the little bit of difference. They both look attractive, but I'd say Smith & Wesson looks significantly more attractive than Ruger Company. But if you would like to see more value stocks moving forward, and I'm definitely going to start investing in them when my AMD option expires, I'll have significantly more money to invest in them. I have a large list of stocks I want to go through and kind of do an analysis with. The only thing left to do is look at the actual chart. That's what we haven't done yet. As you can see, it was flat most of last year, or this was even this year, 6 months out. Flat most of this year. Most of last year, sorry. Actually this year. Then right here, I think it announced its buyback and the end of its financial year, where it showed gun sales doubled. And of course, Biden coming into the White House led to this spike. And we got this pullback. Now this pullback, we need to go to maybe a 1 month chart, see a little bit better. So there's the initial run. And this pullback almost looks about 50%. You get Fibonacci tools. Let's see here, Fibonacci Retracement. If we go here, at the top, and we go from where the run really started over here. See, we're at a retracement of about 38.2%. So we're at almost kind of a support level from that high of about what it looks like about 40 down to a retracement level where it's about 27.47. So it looks like it might be a good level to buy this at, because it had that initial surge, that overdevelopment, where rate went up to about $35, and now it's kind of pulling back a little bit with this little flash crash. So it might be a good time to get in. Yep. It had an intraday high of almost $40. It retraced about to the 38.2% level from this initial base level where it made its first almost straight up surge. So yeah, if it could get back to its high, we're talking about 28, 40 divided by 28. We're talking about 42% gain. So Smith & Wesson Brands, put them on the portfolio, and we'll see what happens with them. But yeah, they're definitely on my watch list. Remember to like and subscribe, and there will be more value stocks moving forward.